You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Hi, this is Tom Cock. I had the pleasure of actually meeting with someone recently in our office. Fantastic to see other human beings. Relish that almost every day. And her question was, if I give you my money, what will the account look like in 5 years? And many of you already know what I'm going to say, and that is, I don't know. But I find it even more fascinating to just look back over the last 3 months to figure out what happened to your accounts. Shocking, really. All things considered, April, May, June. I think you may look back on this as one of the most unusual quarters in stock market history. Why? Well, the pandemic still raging. Unemployment still 15%. Future very uncertain. And yet, listen to these numbers. It's absolutely astounding. The Dow Jones Industrial Average up 17.8%. The S&P 500 up 19.5%. The NASDAQ, the tech-heavy NASDAQ, up over 30%. Smaller companies, the Russell 3000 up 21.5%. The global Dow, looking at other countries as well as the U.S., up over 19%. While bonds, which had a terrific run in the first quarter, made about 1%. And if you really want more drama, well, how about oil? Yeah, that's right. Oil up 109% in the quarter. This is where it was $60 a barrel at the beginning of the year. Went down to zero for a couple of days. Go figure that. And now it's back to about 40. And overseas, you had some pretty good runs too. The DAX up almost 24%. Taiwan up 20, et cetera, et cetera. Oh, by the way, I hope you were not investing heavily in wheat or coffee. Wheat was down about 14%. Coffee, the worst performer, down about 16%. I wonder when that's going to start impacting my wife's coffee habit. She can drink more than she could before. So an amazing run for stocks in this second quarter of 2020, which I ran into somebody the other day. They said they're going to look back on 2020 as the forgotten year. They're hoping it all goes away. That's not the way I look at the world, but let's talk about what you should look at as an investor, right? Because I think there's a couple lessons to be learned from this very wacky, I think we'll look back out of place second quarter, Number one, the prognosticators, again, were wrong. If you go back to the end of the first quarter, everyone said, get out of stocks, pile money into safer investments. You can go back and read all the commentaries telling you cash or bonds are the place to be. And they were absolutely wrong, right? Number two, having a disciplined strategy for your money to rebalance paid off again. What's he talking about? Well, if your discipline is to sell things that have gone up and buy things that have gone down, which is what it should be, you had a great run because at the end of March, we were selling our clients bonds and buying stocks. Great timing. Now, I don't know how this will work out in the long haul, but in the short haul, it absolutely looks terrific. And again, it's not because we're geniuses, because we have a disciplined approach, which we think you should have. If you're still working, you should have a disciplined approach to be buying into the market on a regular basis. If you're not, you should be rebalancing when required. And that brings me to the third and I think most important point. We know many of you timed out of stocks into cash or something else during this quarter because it looked very dark, especially early on. Not that it's looking a whole lot brighter now, but in terms of the pandemic. But you moved out. You timed markets. You decided to go to cash. You thought you had to do something, and that is absolutely the wrong thing to do. We can see that clearly in this quarter, and over the long haul, that's been the wrong thing to do. Don't trust the so-called experts. Have a disciplined approach. Don't time markets. Important lessons learned from quarter 2. I'm Tom Cock.
Talking real money.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only.
Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times.
Also, as much as you want it, no one can accurately, consistently predict the future.
So past performance doesn't tell you a darn thing about what the future will bring.
Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities.
Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor.
Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures.
That should keep the lawyers happy.